from potential excess housing market volatility. Private and public sector economists, domestically and internationally, have commented on the strengths and vulnerabilities in Canada's housing market. While current market trends have largely been supported by strong fundamentals, there's significant variation across Canada in terms of the pace of housing market activity and potential vulnerabilities. When considering how we can address vulnerabilities, it became clear that the complexities of the market require a nuanced approach. C'est pourquoi j'annonce aujourd'hui des modifications aux règles d'admissibilité au niveau hypothécaire assurées et garanties par le gouvernement. Ces modifications toucheront les nouveaux achats
guaranteed by the government, and these will touch the buys that are over $500,000. The down payment assured will go from 5% to 10% for the price of a house that is over $500,000. And this measure will start on February 15, 2016. Parallelly, we will maintain the minimum down payment of 5% for the first layer of $500,000 for a house. Canadians that already have a mortgage won't be touched by this announcement.
That's why I'm announcing changes to the eligibility rules for new government-backed insured mortgages, affecting new purchases of properties priced over $500,000. The minimum down payment for new insured mortgages will be increased to 10% from 5% for the portion of the house price above $500,000. This measure will come into effect on February 15, 2016. At the same time, we'll maintain the current 5% minimum down payment for the first $500,000 of the house price. Canadians who already hold mortgages will not be affected by this announcement. That means that to buy a home worth $700,000 come February 15, 2016, a purchaser requiring an insured mortgage will need $45,000 or 6.4% down payment. Today's measure is targeted at higher priced homes and is a graduated approach to increasing the minimum down payment proportionally to the cost of the home. By targeting higher priced properties, we'll minimize the impact on many first-time homebuyers and regional housing markets where activity is more moderate, while limiting risk and taxpayer exposure to the elevated housing markets in Vancouver and in Toronto. More importantly, this measure will increase homeowner equity, which plays a key role in maintaining a stable and secure housing market and economy over the long term. This protects all homeowners, including many middle-class Canadians whose greatest investment is in their home. Mortgage insurance is important. It helps protect lenders against mortgage default and enables consumers to purchase homes with a minimum down payment of 5%. The government guarantee of mortgage insurance is intended to support access to homeownership for credit-worthy buyers and promote stability in the housing market, financial system, and economy. As part of its role to promote stability and to protect taxpayers from potential mortgage loan losses, the government sets the eligibility rules for new government-backed insured mortgages. Today's measure adjusts those eligibility rules to reflect prevailing house market risks and improve the resiliency of insured buyers. By rebalancing government support for housing, this measure helps to ensure that government actions do not negatively impact housing affordability for current and future homebuyers or increase exposures for the Canadian taxpayer. Ce matin,
this morning, the Canadian Society of Mortgage and Housing has announced augmentations and the caution rights of the Canadian government for the programs, and these adjustments are aimed to see that the prices are equitable for the
programmes
lenders
garantis par le
and
gouvernement
that they
au
are not
détriment des options de rechange du
losing
secteur
towards
privé.
the
De plus,
programs.
ce matin, le bureau du
This morning,
surintendant des institutions financières a annoncé
Office
qu'il
of the
prévoyait
Superintendent
mettre
of
à jour les normes
Financial
de capital
Institutions
réglementaires pour les grandes institutions financières
will
et les
bring
assurés hypothécaires privés en
some
matière
homeowner
d'hypothèque
equity
résidentielle.
in far
Les
as
changements prévus
mortgages.
permettront que l'on s'assure que les
These
normes de
changes
capital
will
réglementaires
make sure
suivent le
that
rythme de l'évolution du
we
marché
follow
du
the
logement
rhythm
et
of
des
the
risques
evolution
connexes.
of the
This
housing
morning,
markets.
Canada Mortgage and Housing Corporation announced increases to the Government of Canada guarantee fees for CMHC-sponsored securitization programs. These adjustments will help to ensure that mortgage funding markets are fairly priced so that lenders are not overly reliant on government-backed programs to the detriment of private alternatives. Also this morning, the Office of the Superintendent of Financial Institutions announced that it's planning to update the regulatory capital requirements for large financial institutions and private mortgage insurers for residential mortgages. The plan changes will ensure that capital requirements keep pace with housing market developments and risks. Taken together, today's actions will strengthen the resiliency of Canada's housing finance system to promote long-term stability and balanced economic growth. Canada truly needs all parts of the system working together to ensure that manageable vulnerabilities do not turn into a crisis. That's why the government will continue to monitor the housing market to make sure it remains healthy, resilient, competitive, and stable for new and existing homeowners.